These companies are criminal, period. And they know it. Their ownership are a bunch of chicken, you know what, because they don't ever show their face. No one knows who owns these big companies. And I know the ones from which you speak. And here's what they do. They sell you quarter-ounce gold coins and they're always quarter-ounce gold. I can't figure that one out so well, but they range between $800 and $1,200 a piece. I've never sold a quarter-ounce coin that high ever. Maybe a quarter-ounce $5 Liberty in a high grade pre-33, but a gold bullion coin from typically from a established mint, quarter-ounce coins that no one else in the country is selling. See, they're very rare. They're hard to find. They make huge profit potential. Trust me, sir. Trust me. And these quarter-ounce coins are marked up so much, it's absolutely ridiculous. And silver coins that will be between 60 and 90 a piece, or 2-ounce coins, 120. They're repugnant, these companies. They know exactly what they're doing. I don't know how these people sleep at night, but it is always the same thing, and I get it every single day. And it's heartbreaking. They prey upon people's IRAs, which in and of itself is criminal because people have worked their whole lives to put money away to buy gold to protect themselves, reluctantly preparing, as you and I always joke about, and they think they're buying gold and they're talked into buying this nonsense. The third category could be proof coins. Again, nonsense. Lipstick on a pig. If you want to buy proof coins, you can buy a few of them, but understand that it is not the vanilla in the vanilla ice cream. It is that's a collectible. You want things that are rich in content, like gold eagles, gold maple leafs, gold bars, silver, and same thing in silver. You want just generic things, but the $10,000 in free silver and gold is even more a joke. Yeah. So, okay, fine. We sell you 1-ounce silver coins at $65 a piece and then give you $10,000 free in that. But the thing is there's 100% markup in that stuff. It's absolutely a joke. And they're making such a massive markup that when you figure out exactly how much they're actually giving you, a couple 300 ounces or so of silver, 200 ounces, whatever it is, it costs them $4,000 or $5,000, whatever the number is. But they're making multiples of that when they're selling you this nonsense. And I'll just simply say this. If you have an IRA order and you bought quarter-ounce gold coins that were between $800 and $1,200 and silver coins north of 60, you've been screwed, period. I mean, there is no other way to say it. And these companies are really good at it. So you can always send us an email. We've become pretty good at helping people understand what they have. And to your point, that client, called the attorney general, and there's nothing wrong with doing that. You've been wronged. And if you look at the price that they were paid, and then if you look at the price people have paid for quarter-ounce gold coins, and look at the spot price right now, divide by 4, we're pretty damn close to all-time highs, and you're still a couple $100 away. You've been screwed. And there is no reason you shouldn't get really angry and try and do something about it. I mean, I've gotten to the point now where it just makes me so furious, and I wish I could debate these companies in public forum. I wish I could mention their names. I'd like to, but I don't. Same reason you don't. But the more that I've seen real life examples of this and how they've decimated people, the more it just becomes really, really gross and really, really aggravating and sad. And I don't know, Dunnigan, it's one of the worst things I've ever seen in my career, and it's everywhere. These companies are very good at marketing and persuasive to people who don't know better.
These companies are criminal, period. They know it, and their ownership hides behind anonymity. No one knows who owns these big companies, but we know their modus operandi. They sell you quarter-ounce gold coins, always quarter-ounce for some reason, ranging between $800 and $200 a piece. I have never sold a quarter-ounce gold coin that high, maybe a high-grade pre-1933 $5 Liberty, but not a typical bullion coin from an established mint. These quarter-ounce coins that no one else in the country is selling are marketed as rare and hard to find, promising huge profit potential. Trust me, sir. Trust me, they say. But these coins are marked up so much it's ridiculous. The same goes for silver coins, which can range between $60 and $90 a piece, or 2-ounce coins for $120. These companies prey upon people's IRAs, which is criminal in itself. People work their entire lives to save money, reluctantly preparing to buy gold to protect themselves, only to be talked into buying overpriced nonsense. Another scam is proof coins. marketed as valuable collectibles. But if you want to buy proof coins, understand that they are not the vanilla in the ice cream. They're just lipstick on a pig. You want assets rich in content like gold eagles, gold maple leafs, gold bars, and the same for silver. The free silver and gold promotions are even more of a joke. They sell you 1-ounce silver coins at $65 a piece and then give you $10,000 worth of free silver. But there's a 100% markup on those coins. The cost of the free silver is a fraction of what you're overpaying for the initial purchase. If you have an IRA and bought quarter-ounce gold coins for $800 to $200 each, or silver coins north of $60, you've been screwed. These companies are experts at this scam. You can always reach out to us for help in understanding what you have. If you paid inflated prices for quarter-ounce gold coins and compare them to the spot price now, you'll see you're still a couple of $100 away from breaking even at near all-time highs. It's infuriating, and I wish I could publicly debate these companies and expose their practices. The more real-life examples I see of people being decimated by these scams, the more gross and aggravating it becomes. These companies are great at marketing and persuasive to those who don't know better. Now let's shift gears to the bigger picture, especially concerning China and their gold-buying strategies. Despite rumors that China stopped buying gold for a month, don't be fooled. Throughout my career, I've known that China's reported gold stockpile numbers are lies. They consistently report holding 200 metric tons, despite mining between 400 and 500 metric tons annually for years. China's entities, like state-owned banks, are accumulating gold without reporting to the IMF. Banks like ICBC act as proxies for the People's Bank of China, quietly buying gold from refineries in South Africa and Switzerland. They don't report gold under 999.5 purity, similar to how the US hasn't updated its gold numbers since 1953. China is strategically maximizing its gold accumulation before a potential revaluation. Western media might report that China isn't buying gold, causing prices to drop temporarily. This manipulation allows state-owned banks to buy more gold cheaply. Meanwhile, India has been importing massive amounts of silver from the West, between 600 and 700 million ounces over the last 2.5 years. This amount is 10 times the silver in the registered category on the LBMA, of which only 300 million ounces are unencumbered. The LBMA admits trading 2.9 billion ounces of silver per day, 10 times the 292 million they post, indicating that the numbers are understated. This leverage to the downside suppression is playing into the hands of countries standing for delivery. These countries understand what we are doing and are draining the exchanges, including the Shanghai Metals Exchange. Yes, gold is a Tier 1 asset, and it is being accumulated and will likely be part of a new system. But silver should not be underestimated. It is the trade of a generation. India's massive accumulation of silver proves its value. For those holding silver and feeling disheartened by its price movement, remember, it offers incredible upside potential. Don't do as you're told. Do as the others are doing. These countries are using market suppression to their advantage, draining the exchanges and taking possession of precious metals in volumes never seen before.
I look at as complete phooey is China stopping to buy. They stopped buying gold, right? They didn't buy gold for a month, and which is a bunch of nonsense. Because look, my whole career, my entire career, everyone said the numbers that China reports as having as their gold stockpile is a lie, because it was like at 1,200 metric tons forever, and for years and years and years, never changed. Yet there are people who tell you they mine between 400 and 500 metric tons per year every year. They're the largest producer in the world and have been mining uneconomical gold forever, right? And so just that alone is massively significant. But they have entities in China that, they're not, these are banks that are not reporting to the IMF their gold holdings, like ICBC as a proxy which is a state-owned bank, as a proxy for the PBOC, which is accumulating gold hand over fist, dealing with the refineries in South Africa and Switzerland, not reporting it. If gold that they accumulate is under 9995 pure, they don't report it. Just like we haven't updated our numbers since 1953, they're not going to update their numbers. But it would certainly behoove them to maximize the amount of gold they get before it gets revalued, like we talked about earlier. Remember, revalued. So they're not going to tell the world, yeah, we're buying it hand over fist. In fact, let's just tell them we're not buying it. And you guys, our state-owned banks, quietly, shh, go start buying it. We're going to tell them that we stop for a month. The prices will fall because the Western media, a bunch of idiots, and the price will fall, and we can buy some more cheap and start getting more cheap on behalf of the idiots in the West who dropped the price. What I would also say is everyone focuses on the imports of silver from that India has been doing from the West, and it's massive, between 600 and 700 million ounces over the last 2.5 years from the West, right? Yeah, huge, because it's 10 times the amount of silver in the registered category. We're supposed to be told that there's 800 million ounces on the LBMA, of which only 300 million is unencumbered, 500 plus belongs to the ETFs. That's also the platform, as we've talked about, that trades 2.9 billion ounces per day, 10 times the 292 million that they post. They admit those numbers are 10 times understated. You're talking 3.5 times annual global mine supply traded per day on these Western exchanges, which gives all of these countries, what did I say they're doing? Standing for delivery. They know what we are doing, and they are standing for delivery. They are draining the exchanges, and now they're draining it off the Shanghai Metals Exchange, also continually draining the exchanges. At the same time, on the LBMA, again, remember, they understand, the BRICS understand what we're doing with price, and on the LBMA, they admit to trading 2.9 billion ounces of silver per day, right? Really, this leverage to the downside of suppression is playing right into the hands of these countries. And so, yes, gold is tier one. Yes, gold is being accumulated and probably will be part of a new system, but silver should not be underestimated. It is the trade of a generation, and I do think that India, with their massive accumulation of it, is proving that. So for those of you that have silver and have been less than enamored with its price movement or thinking of buying it, I don't think you'll find a better asset, period, to buy when it comes to upside potential. So again, don't do as you are being told, do as the others are doing. And you can see it exactly what they're doing, and they're using this suppression to their advantage, not only through draining the exchanges, not only from taking possession, but doing so in a manner the world has never seen before, in a volume the world has never seen before.
Understanding these global financial maneuvers reveals the strategic importance of gold and silver. These metals are not just ancient relics, they are strategic assets that can profoundly impact global financial stability. As nations like China and members of the BRICS consortium strategically accumulate gold, they signal a shift away from the traditional reliance on the US dollar and its associated financial instruments. This shift is evident in the increased delivery requests in the commodity markets. When countries demand physical delivery instead of paper contracts, it underscores a growing mistrust in the existing financial system. The move to hold physical gold is a hedge against potential currency devaluation and economic instability. It's a way to secure wealth that has proven reliable through centuries of financial upheavals. Take China's strategic actions, for example. By purchasing the London Metals Exchange and building warehouses in China, they ensure control over base metals, critical components in industrial and technological development. Simultaneously, their significant role in the rare earth metals market gives them leverage over vital resources necessary for modern technologies. These moves are not random, but part of a coordinated effort to establish economic dominance and security. Moreover, the establishment of the BRICS Grain Exchange aims to shift power dynamics in the global grain market. By moving away from trading in US dollars, BRICS nations can protect themselves from the volatility and political risks associated with the dollar. Instead, they trade in national currencies, fostering economic resilience and stability. This approach allows them to influence prices for commodities crucial to their food security. For individual investors, these global strategies highlight the importance of diversifying into physical assets like gold and silver. As the dollar faces increasing pressure from both internal and external forces, Holding these metals provides a hedge against potential economic turmoil. The historical performance of gold and silver, combined with the current macroeconomic environment, suggests that these assets will continue to appreciate in value. Consider recent predictions from major financial institutions. Bank of America forecasts gold reaching $3,000 an ounce within the next 12 to 18 months. If we apply the historical gold-silver ratio, this puts silver at approximately $71 per ounce. Such projections are based on thorough analyses of current economic conditions and global financial strategies. In addition to institutional predictions, personal anecdotes and real-world experiences underscore the need for proactive financial planning. Ignoring warning signs in the economy can lead to significant financial losses. Regularly assessing your financial situation and making informed decisions based on current data can help avoid catastrophic outcomes. Since 2008, the global financial system has increasingly relied on money printing with diminishing returns. Confidence between banks has eroded, as evidenced by the decline in interbank lending. Central banks have lost confidence in each other, highlighted by the Swiss National Bank's surprise actions in 2015. More recently, confidence between central banks and Wall Street has faltered. The final layer of confidence lies with the public, and if that erodes, the consequences could be severe. Public confidence is crucial. Those insulated from the immediate impacts of inflation might not feel the urgency, but for many, the rising cost of living is a significant burden. As monetary velocity, the rate at which money changes hands, increases, it indicates a shift in economic behavior. People are rushing to spend their money while it still holds value, a sign of the early stages of hyperinflation. This shift in monetary velocity is a key indicator. Historically, periods of rapid inflation lead to increased spending as people try to offload their devaluing currency for tangible goods. The current increase in monetary velocity suggests a lack of confidence in the currency's long-term value, prompting people to spend rather than save. As these economic dynamics unfold, the value of gold and silver becomes even more apparent. These metals provide a tangible, reliable store of value that can withstand economic fluctuations. They offer security in times of uncertainty, making them an essential component of any robust investment strategy. For individual investors, the lesson is clear. Diversifying into physical gold and silver is not just a hedge against inflation. It's a strategic move to protect against broader economic risks. The actions of central banks and the macroeconomic trends provide a clear roadmap. Following this roadmap can help investors safeguard their wealth and ensure long-term financial stability.